There's one stat that's misleading everyone right now. We're diving into that stat along with everything that's going on in the metro Atlanta real estate market, and we're doing it right now. Let's do it. John McCoy here with Keller Williams Realty Chattahoochee North, and I serve Atlanta and the metro Atlanta area for real estate now for 9 years plus. And today we're diving into the latest market stats for the metro Atlanta area. So without further ado, let's jump right on into it. All right, so for those that have been watching my channel for a while now, you know that one of the things I love to lead off with is this chart right here, and this is the 6 months trend that's happening here in the metro Atlanta area. As we jumped into this, let me let you know, for those that are new to my channel, usually I focus on the single family detached homes here in metro Atlanta area. Every once in a while I jump to condos, but not today. So we're looking at just single family detached homes. And we're looking at the number of actives coming into this month. We're looking at 9,124 active homes in all of metro Atlanta area. As we see, this number has certainly grown from May, but kind of leveled out here from August to September and October. We're seeing it definitely, we had a big jump in it, and then it's kind of evened out a little bit. The pending ratio, this is number of homes going under contract. So in the month of October, we saw 4,471 homes go under contract but haven't sold yet. This pending number is going down, which leads me to a number that I have been talking about all year long, and that's this pending ratio. We have seen this drop month over month since about February of this year. We're now down to 32.9% of homes are pending, meaning if you take the number of total homes available and compare that to the ones that are under contract or pending in this case, that's the percentage of homes. So about 32, almost 33% of the homes out there are under contract. That means 66% of those homes are just sitting on the market right now. So we see number of solds is 3,183. And let me say that you need to take this with a grain of salt, and here's why. Um, we've got to figure out what's going on here based on seasonality and based on the changing market. So we have two things happening at once here. And I really think the things that you're seeing in the news, it's scaring everyone. They're talking about a shifting market, but they really are not talking about seasonality of the market. Same thing on YouTube. You'll jump here and again, hear all kinds of people. Again, I keep hearing people talking about it's a buyer's market out there. Guys, it is not a buyer's market out there. We're far from a buyer's market still going into November. And again, I've said multiple times on here, unless something major happens, we're not going to be in a buyer's market anytime soon. Just inventory is too low. Um, are buyers getting a better advantage than they had back in 2021 and 2020 when the pandemic hit? Absolutely, which is making it seem like a really big buyer's market because buyers are being able to put back due diligence and contingencies in their offers. But it's not a buyer's market, okay? It is still very much a seller's market. I see some people talking about the big drops in sales prices that are happening, and we're going to talk about that in a bit. But again, still a seller's market. We look at distressed homes. Only 0.5% of homes are distressed, meaning that they're selling as foreclosures or REO properties. So there are not very many distressed homes. Most people have plenty of equity in their homes, which again is why it's still a seller's market. Failed listings, this is a big number. We're now up to 35.6% of homes have failed to sell in their contract period. So that means whether it's we sign contracts for how long we're going to list a property as real estate agents, whether that's a month or 6 months. For this month of October, we saw that 35.6% of homes failed to sell. That's a big difference than in May, but again, we've been in this crazy market. So when we actually look at historically the percentage of homes that fail to sell, this is right in the ballpark. So really what we're seeing is getting back to a normal market. We've been out of that market for 2 years now. So it seems like everything's changing really quickly. I was in a class about some of these stats and heard a great analogy used that they asked the guy leading the class asked everybody have they've ever driven um, a car over 100 miles per hour. And it so happens I've actually been able to do that. I got a cool racing experience to do and actually drove it at 140. And he's like, okay, well, let's give this analogy. So the past 2 years, we've been going 140 miles per hour in real estate. It's going super fast, especially on the listing side. Sales are just happening like that. Not much effort to it, right? Well, when you slow down from 140 and go a normal speed limit, like let's say on 285, so 60, well, normal what you're supposed to go, not what actually people do, but 60 miles per hour on 285, it's going to seem super slow compared to that 140 miles per hour. And if you keep going slower than that, like 40 and 30, 20, it's going to seem really slow. Well, right now, people are acting like that we're going zero or maybe even reverse. Reverse is when you get to a buyer's market. That is not the case at all. What we really are seeing is we were going 140 miles per hour, and now we're going about 100 miles per hour. By the end of the year, maybe we're going 80 or 60 miles per hour. It seems really slow. And everybody's gotten so used to going 140 for the past 2 years that they just totally forgotten what a normal market looks like. So right now, again, still a seller's market, and we're still going at a pretty quick speed right now, still because of the amount of inventory. We're still seeing about 25 to 30% of homes getting multiple offers still. So it's still happening out there for those buyers out there. You're still seeing, low inventory, still taking some time to maybe get under contract. But again, things are moving back towards more normal market. And jumping back here to months of supply, we're now at 2.9 months of supply of inventory. Again, 6 months to 7 months is kind of not a buyer's or seller's market, but an even market. Below 6 months is a seller's market. Above 6 or 7 months is a buyer's market. So we're at 2.9 months. It's definitely jumped up from that 1 month of inventory. We're probably going to see this level off. It wouldn't surprise me if by January or February, maybe we're at the 3.5 months, maybe 4 months. I have a hard time seeing it going above 4 months of inventory. You never know, but we definitely see a slowdown in new homes coming on the market. So ones that haven't been listed before. So we see more active homes on the market. We've seen less under contract. So what's really happening is the number of active homes is kind of building on each other because they're not selling as fast. But in terms of brand new listings coming to the market, we're just not seeing as many right now. That's really slowed down. And again, is that because of seasonality or is it because of the market? I think it's a combination of both. I think you're having some seasonality, less people list during this time of year, especially in these holiday seasons coming up. But we also see is this market really is dictating people to stay in their homes longer. Why sell a home where you've got, a 3%, 3.5% mortgage right now that you're paying off to go into a home that's around 6.5 or 7? So a lot of people don't want to do that and can't. So that's why we're seeing, again, a combination of seasonality and this market kind of dictating the supply. We come over here, median original list price, we see it 439,900 and the median sales price of 420. We're only getting 97% of the sales to list price ratio, which is good. Again, we're starting to see negotiations happen, but this number right here, and we're going to pause here for just a second. I think this is one of the big issues of why people think, we've all of a sudden gotten to some kind of buyer's market, which we're not. And that's because we're still having agents and people that are selling their house kind of adjusting to this market that's getting back to normal. Again, you can't see your neighbor sell for $450,000 with, we'll just say in this case, the exact same home that you have and think you're going to list it at $500,000. It's just not happening right now. And again, I've emphasized this on multiple videos that I've done. If you got a home that needs some work right now, buyers have just had enough. Buyers agents have had enough. They're just not offering, crazy offers on homes that need new roofs and paint and HVAC systems and flooring, and the list goes on and on. They're just not doing it. We're back to making sure that your home is ready to sell. And if it's not, you're going to be taking hits on that sales price, which I think is a good thing. So what we're seeing is this adjustment. I think we're going to see less crazy pricing in the near future. But I mean, I've seen homes, drop in $150,000, and people are like, "Whoa, look at this market right now. You should buy." And it's just the person just listed way too high because they haven't gotten used to this market yet. So again, we're seeing drops in prices. If you're seeing a home that's way overpriced and you're out there buying right now, it's a good idea just to wait on it. Wait till it comes down to a reasonable price um, that's right for you. Last days on market, we're at 23 days on market. Again, that's really fast. That's still quick for a home. So days on market still low. I expect that number to go into the 30s, maybe close to 40, but somewhere in the 30s probably come January, December, somewhere around there. And I'm going to switch down here to just we're talking about days on market and inventory. Going to switch down here to the supply and inventory based on sales price or at least list price of homes. Um, and so what we're seeing here is the different prices and the breakdown of it you see in this range where most people want to buy at from the 300s to the 600s that we're staying here in the 2.5 to almost 3 months of inventory. As we get up to 1.5 million, we still see it's still a seller's market. We still only have 3.3 months of inventory at 1.5 million. Um, and then once you jump up to the 2 million plus, you'll see this inventory kind of fluctuate a lot because there's just not a lot of homes. When you have a smaller amount of homes in a category, you can see the numbers jump all around. But we're definitely in more of a buyer's market once you get to the 2 million plus. So if you're looking for a buyer's market and you have 2 million plus you want to spend on a home, now we're talking about more of a buyer's market in there. Um, and we'll probably see that 1.5 and maybe if the 1 million start to hit there, maybe in 3 or 4 months from now. I think it'll start to get there. But again, that the average person buying a home, we're going to be sitting in this lower inventory for a while. Right. I told you that there's some misleading information right now. And a lot of that comes from not understanding seasonality of the market and just looking month over month. Month over month, don't get me wrong, month over month can help us. It can kind of help guide us about what's happening in the market. So it is important. However, if you don't factor in seasonality there, you start to get the wrong understanding of what's happening in the market. So what we're going to do is we're going to take a look at not only seasonality, but also take a look at the trends in the market and try to really figure out what's going on and kind of give you these numbers to the best of my ability so you can have a better understanding of what to do in the market if you are looking to buy or sell or hold right now and wait off on investing in real estate. So what we're going to do real quickly is let's look at month over month. You'll see if you look back in June, we were at $467,388 for the median sales price. You come here to October, now we're at 420,000. Makes it look like that's a huge drop in the market and it's going to keep going. I can see why people would think, hey, the market's crashing. Look at these numbers dropping. However, there's something else, and again, I keep saying is seasonality. So what I want to do is kind of look month over month. Now, one of the things that's hard to do here is 2021 and 2020, the pandemic years, almost have to be thrown out because those were some of the craziest years in real estate. All the trends were bucked. I mean, you even have it to where home prices were going up throughout the year, including November, December, January, which just doesn't happen in normal markets. But looking year over year in terms of the same month is really helpful when comparing real estate markets. So if I look back to October 2021 through versus October 2022, we'll see we've had a higher jump of actives. We have less pending. We kind of know this. The pending ratio is lower. We know this. But one thing that surprises some people is look at the median sales price. We were at 395,000 last year. We're at 420 this year. So we still have a 6.3% increase in median sales price from last year to this year. And the next thing we want to look at is kind of let's compare the market of 2022 in October to 2019, 2016. These are comparable markets in terms of where we're sitting at kind of month supplies close to and what was kind of happening in the market as a buyer's market versus a seller's market. This is still a seller's market here. Um, and what we see is a few things standing out to me. We still have a lot less active listings, but we also have a good bit fewer pending listings here. Number of solds is down as well, but our supply of inventory is also it's close. It's a little actually more than back in October 2019, but less than 2016. But look at the sales price, um, much bigger. So the sales prices are still kicking up. Days on market still lower. So when it comes to like, oh my goodness, this market is crashing. I never heard anybody in 2016 or 19 talk about, this market's crashing. We were constantly on the rise. So all this crazy talk about a crash is it's just that crazy. Yeah, I know we're fighting inflation and all that stuff, but we're doing all right in real estate. The biggest thing is you just got to figure out, hey, with these interest rates, the interest rates are higher than they were in 2016 and 19. um, is it a smart time to buy? That's what you really got to ask yourself if you're buying. For selling, things are still selling. So I think for sellers out there, you can compare these and just kind of get ready for. I mean, the days on market we're seeing here, we're at 21. Back then they were at 35 and 38. I think we're going to get back there. So just know you're going to have to maybe be on market longer, be ready to negotiate. But for sellers out there, still think it's a pretty normal market when you look at historically sellers markets. For buyers out there, again, just factor in what's that interest rate. Good news is over the last few days, interest rates took a big dive. I know today there's more news coming out as I'm filming this, so we'll see where rates go. But last time I saw, they were like 6.75. So, okay, so I told you there's a number that I think is being misused like crazy out there, and that's median sales price. Okay, the median sales price that keeps showing these numbers all over the country, everything's plummeting, the sky's falling, all that stuff. But so what I want to do is take a look at seasonality of sales prices and compare that to what's happening in the market to get a better understanding of, are we really dropping that much in median sales price, or is the seasonality just taking effect? So as you look at this chart's crazy. All right, this chart's nuts. For those that are taking a look, yes, it can be confusing. This chart goes all the way back to 2003 and the sales prices and what happens. Um, and there's going to be people yelling and screaming at me on this, I'm sure, but I'll do my best to explain it. So you can see January, December at the bottom. You're going to see a trend like this go over and over. You see January to June, maybe into July, but June, we see prices rise. From June and July to October, sometimes in November, depending on the year, we see prices fall. Then back in November, December, into the next January, we see prices go back up again. It's seasonal. That's what happens in real estate. We see median sales prices go up and down all the time. Now, one place we can throw out is this one here, right here is 2020. This is 2021. The pandemic. You're going to see the dip here. This is, I think, when the pandemic and everything was closing down in May. And then look at this. It just goes up, kind of levels out, but you definitely don't see the same charts here or really in 2021 here as you see all the other times. So take 2020 and 21 and throw those out the window. What we see here in the red is 2022, where it goes up and starts to drop back down. Look at the blue here. It goes up and starts to drop back down. That's 2015 here. 2018, up and drops back down. Let's go way down here in the orange. 2011, we're talking about the lowest point in the market. It goes up and back down. It's just what we see over and over for a vast majority of the time. 2009 here bucked the trend a little bit. But a vast majority of the time, we see it's kind of like a little roller coaster ride going up and down. We see the same thing here in 2022. Now, before everybody yells at me, yes, look how close all these charts are, and then look what happens here in 2021 and 22. There's a huge gap. So we would seems to reason that we should have some falling back down of prices in here to kind of make these numbers squish back together. So you see the craziness at the bottom of this chart here, that it would be somewhat similar at the top of this chart. Again, I've talked about this a lot. The inventory is really controlling a lot of this. You also have the inflation that just, we've jumped up, so things are going to be more expensive on it. So do I see this coming down some? I do think it will come down some because of the market, but let's go look at this next chart. I like this one here. Let's really talk about seasonality and why I think the numbers are a little skewed out there. So let's go back to 2014. We're going to look at all these. 2014, month of June, we had $235,000 as the median sales price of homes. Month of October, 212,000. What's that change? 9.8%. All right, 9.8%. We also have attached homes on here too. I'm not going to get to that because I'm just talking about detached today, but the red are the detached. So we see a drop of 9.8%. 2015, from June to October, we see a drop of 7.2%. 2016, a drop of 7.7%. 2017, a drop of 8.8%. 2018, a drop of 8.5%. 2019, a drop of 8.9%. All right, keep those in mind. Going over here, all right, we're seeing the year over year. This is from one year to the next. What's been the change? From 2014 to 15, we saw a 6.1% increase in the month of October. 6.2 the next year, 4.6, 8.0, 2.6, all right? So we're seeing very similar things here that we're going to see in 2022. Now, again, I said throw out 2020 and 21 because the pandemic years were just crazy. We see the stats kind of showing it here with the crazy amounts of increases. But when I jump to 2022, let's see what's happening. We see a drop of 10% here, and year over year, an increase of just 6%. Now, this year over year increase falls into the category of what's happened pretty much over the past 5, 6 years we're looking at here. We do see a bigger in or decrease in the June to October numbers in terms of the rate at which they fell. Okay, we do see it go down to 10.1%. Our other highest one was 9.8%. Our average in here probably, I didn't do the numbers, but just looking at it real quick, maybe it's around 8.2, 8%, 8.3. So what I would say is that yeah, some of this decrease is because of what's happening in the market right now. Maybe a 2 to 3% drop. The rest of it, I think, can be attributed just to seasonality. Because look at these seasonality changes here. So when looking at the median sales price, when all these people are talking about it and talking about the skies falling, just remember that you have two factors going on here. You have seasonality and you have the market at play. I think right now what we're seeing is way more seasonality than we're seeing a market change. So just continue to be on the lookout on this one. Continue to stay um, vigilant as to watching these things. What I do want to leave you with is this. My goal as a real estate agent and for giving information on this channel is just to give the best information I can to make you fully aware. I'll give my opinions on some of these things and where I think it's going, but I try not to get too much into that because I don't want people thinking like, well, you're a real estate agent. Your job is to sell homes. You're just going to tell everybody it's a good market, which I've talked about it before. Depending on who you are, people are buying and selling real estate all the time, and it has nothing to do with whether I think it's a good market or not. Just there's always opportunities out there. With that said, my goal is just to bring you as much accurate information as I can for you to make informed decisions out there. So if you're looking to buy, sell, or invest in real estate, give me a call, shoot me a text, send me an email. If you like this video, found it valuable, hit that thumbs up button. Don't forget to subscribe. I bring videos to you weekly. Thanks, and I'll see you next time.